Hi, I'm Andrea Ushry. I'm a tax partner with Serratomatic 7 CPAs, and we're doing a webinar today. I'm lucky to have Ed Enoch from Enoch Tarver here with me. He's an employer attorney, and Ed has been a tremendous resource for our firm and a lot of our clients through this trying time with all the new rules of the CARES Act, trying to determine how we help our employees, how we help our clients determine whether they should put their employees on unemployment, whether they need to apply for a loan. So what we wanted to do today is to touch on some of the items that relate to the CARES Act and how that has impacted our clients and what their options are. So if you've been watching the news, Annie, you probably have heard so much about what we call the Paycheck Protection Program and how employees have been either applying for the loan, they think they've got the loan, they've been to their banks, it's through the SBA. So there's been a lot of concern, wouldn't you say, Ed, relating to this, a lot of anxiety. In fact, we just heard yesterday, or no, this morning, I believe, or late yesterday afternoon, that maybe all the loan money has been authorized, right?
That's right. Yeah.
So we're anxious to see which clients receive the money. I know people are waiting. We've had that conversation with them. Haven't heard from their bank for sure. So don't really know. I actually haven't had a client yet that has received the money. Have you, Ed? Have you heard of anybody that actually got the funds?
I have. I think I talked to the first person in Augusta who got the money and immediately had questions
Right.
about how to spend the money and really even questioned whether ultimately that was the best thing for them to have done.
Right.
Was to take out this loan. So I think it's going to be useful for us to talk about. Everybody's been focused on how to get the loan, and now as people start getting the funds, they've got some definite restrictions on how they use it and when they use it. And so I think it's going to be important for us to get out in front of that.
Well, I think we'll start by just doing an overview of the two types. The main things I want to bring up something here that shares an overview of the actual form, and I think I've clicked out now, Ed. Pause this, Becky. There we go. There we go. Here we go. All right. So you can see this. Ed, you see the screen?
Yep, we got it.
Good. All right, good. This is a summary of the CARES Act Small Business Cash Flow Relief, and I really want to cover just the first two columns, the two plans that came out that a lot of our employers were working with, trying to get the money to help them stay where they could keep operating, pay their employees. The first one is the one you've heard so much about, the Paycheck Protection Program, and it's an SBA loan, and it's literally intended for what it says, to cover payroll, and then a couple of other things is rent and utilities from February 15th through June the 30th of 20. And so when the people were applying for the loan, we've helped some people with that, and there were a lot of questions initially, what do we do? But it was, we did a look back to 2019, and we could take 2.5 times their average monthly payroll up to $10 million, and we could only consider $100,000 per employee. So we basically looked at their box 5 wages on Medicare wages. We added to that their retirement expenses. We added their health insurance cost that the employer had for those employees. And then we divided it by 12, and that was the number. That was how we came up with our, divided by 12 and multiplied it by 2.5 to get their monthly payroll cost when they applied for the loan. So basically what we're going to be doing is when it comes time to look at forgiveness, we're going to go back and look at those items to see if they paid out, that amount for a certain time period. And I'll cover that in a minute. The PPP loan was limited to people who have less than 500 employees. The SBA guarantees the loan. The rate, if you don't if you're not able to pay all of that off or cover it and get the forgiveness, the rate's 1%, and it's a 2-year maturity. We're going to have a 6-month deferral on payments, which is good. And again, it says up to 100% forgiveness if your staff is retained or rehired. And we're going to talk about that more in just a moment. And there's also self-employed people were eligible as well. And we got more clarification just in the last few days. So I'm a little concerned. They opened it up this past week, I believe, to self-employed where they could apply. And, you know, people that have Schedule Cs on their individual return, people that are partners in partnerships, how that applied to them. And so we worked through that with some of those. And again, I'm hoping they were able to get the money. So let me go back up real quick too. And let's just look at the EIDL, which is short for this economic injury disaster loan. Basically, it was really just, you know, getting money as quickly as possible. Now, the rates are different. You know, you could get a maximum of $2 million for the loan, but you didn't go through a banker. You had to go through SBA to get this. The rate for repayment is a little bit higher. It's 3.5% for small businesses and 2.5% for nonprofits. It says it has up to a 30-year maturity, and you can defer the repayment for 1 year. Now, part of this was a $10,000 grant that you would get up front initially, just like almost immediately. And even if you didn't get the loan, that you get to keep that $10,000 grant, and it's basically free money. It's forgivable. And another part of this is once you are approved for the PPP loan, you can then roll this loan into the PPP loan. So,
hey, Andrew, can I interrupt you for just a second?
Sure.
There? For one thing, somehow or another in sharing your screen, you turned your video off. So
okay.
We can't see you. We can see your screen.
Well, there's nothing wrong with that. Here we go. I think I got it now.
There you are.
Yeah, there you go.
Now you're back. So I applied for the EIDL loan as well as the PPP, and we got notification just a few days ago for the EIDL on that. What it says is up to $10,000 up front, and the way they're allocating that is it's per employee. So you get $1,000 per employee that's on your payroll at the time that you applied. Everybody doesn't get $10,000 immediately. You get up to $10,000 based on your payroll. And theoretically, that was supposed to be put in our accounts within 3 days of applying for the loan. I think what they're doing is just not processing the applications until they can fund the money, because I hadn't seen that money in my account.
You haven't seen it? I wonder, yeah.
And I really don't have any sense of how they're going to decide how much money to loan people, because the only questions it asks on that application are what were your total revenues for the last 12 months, and what was your cost of goods sold. That was it, huh? That's really the only two numbers they're asking for. So I don't know that anybody knows what the magic formula is going to be for deciding, ultimately how much of that up to $2 million do you get in a loan. And I think we need to make sure people aren't confused. There is no forgiveness for this loan. I mean, you don't have to pay back that first deposit that they make into your account, whatever the up to $10,000. But after that, it's a loan. I mean, it's my understanding and talking to SBA folks, they're going to anticipate they're all going to be 30-year notes. It's not a bad loan. You don't have any personal guarantee on it. There's basically no underwriting on it. So, it's very favorable terms, but it's not like the PPP where it may just go away.
Have you heard that they've capped out on the funds for that as well?
I have not heard about that.
I saw an article yesterday that said that they were getting close on that as well as far as funds. I never knew what, the availability was to begin with. And like you said, how they're prorating the loans, I have no idea. And who's getting them, based off of those criteria, I really don't know.
And I know one of the frustrations I've heard a lot on the PPP is from those self-employed folks that didn't have W-2 wages. My understanding was it was built into the bill that they couldn't start processing those loans. Like they started processing the regular loans April 3rd, theoretically.
That's right.
But I think it was just this week that they were even allowed to start processing the self-employed loans, at which point the money was almost gone.
Well, it was frustrating for me because I had some clients that are partnerships and they had applied for the loan, but the banker was telling them, based off of what he'd been told, and it wasn't clear, that the two main partners we had in this particular business didn't qualify as employees. So they didn't get to take, up to $100,000 and include that as part of their payroll cost. Fortunately, this week, I think it might have been Tuesday, we got some clarification on that from SBA, and it did say, yes, you should include the partners, their self-employment income plus their guaranteed payments up to $100,000. So that would be whatever's on their K-1, rather than them having to apply separately, because it wouldn't make any sense for them to go as a self-employed person and relate, they've got payroll costs, rent, utilities. How would you connect that to the partnership when they apply for that? So fortunately, there was some clarification, but I'm like you, I'm worried that it was too late and that maybe everybody had used up the funds. So I don't know what their status is, but I do feel for the people that are self-employed and are even considering applying now, because it does sound like the funds have all been authorized in this particular round. But our hope, Congress keeps talking about it, is that there are going to be more funds available. They just haven't reached an agreement on that. So hopefully they'll get together and fund this thing so that more people can apply and, make access to this. I will bring up one thing too. In conversation with some clients, we've had people say, well, I've got employees that are sitting at home. They're not working. I really don't want to pay my employees to stay at home, or I don't feel like that's the right way to do this. And I think they're missing the intention, especially with the Paycheck Protection Program. That's why they call it the Paycheck Protection Program, is that to try to keep money flowing into the employees' pockets so that they can pay their bills, they can, buy their groceries, do what they need to do. So the whole point of it is put them back on the payroll. Start paying them again. And I think that's a good place for you, Ed, to kind of lead into, okay, employers have put their employees on unemployment, right?
Right.
So now if they get this paycheck protection loan money, what do they need to do with their employees?
Okay. Let's talk about the unemployment a little bit, because there's a piece of this CARES Act that is also deals with unemployment. And one of the things that I'm already hearing from people who've gotten the PPP loan is they're getting pushback from their employees because a lot of the employees aren't going to get as much money being back on payroll as they would have had being on unemployment because of the massive supplement that the federal government put on unemployment.
One of the best jobs they've ever had, getting paid to stay at home, right?
Yeah. So the PPP does allow that, if you furloughed or if you've reduced pay for people up to April 26th, then you can put them back on payroll. And we can talk about that when we get to the loan forgiveness part of this. But the folks that have been put on unemployment, I want to talk a little bit about that. One, Georgia changed their rules very early on to say employers need to be filing for their employees. If you've either reduced their wages or reduced their hours or furloughed them. And I've had people ask, well, what's the difference between a layoff and a furlough? And it makes no difference what you call it. If it was a reduction in hours or you were putting people at home and not paying them because of this virus, that's what qualifies. That means you need to be applying for their unemployment. If you terminated someone, if they just quit or moved or whatever, those people you still don't apply for them as an employer. It's only for the people that you've reduced hours or cut them because of the virus. So you've put them on unemployment. Up until this week, nobody was seeing the extra money. So what the CARES Act did was, one, it supplemented Georgia's unemployment and all the states, Georgia and South Carolina. So in Georgia, the most you can get on unemployment is $365 a week if you max it out. Then there's a $600 additional supplement that was in this CARES plan, CARES package, that per week, $600 per week. So that's almost $965 that you can get just in unemployment benefits. Plus, Georgia raised the minimum or the maximum amount that you can earn without getting hit on your unemployment. So you can earn $300 a week without that counting against you. So you could bring home $1,265. That's before taxes, because unemployment benefits are taxable.
Right.
$1,265 a week to do little, to do enough to earn $300 basically. And so what's happening now is, once you get the PPP as an employer, you're obligated to spend that money in 8 weeks. Your clock starts running when the bank funds the loan. You have 8 weeks to use it or pay for it, basically. It's not going to be forgiven if you don't use it in that 8 weeks. So you need to put these folks back on the payroll. And so we're getting some pushback. There's folks that are going to lose money by going back on payroll. And I've had that situation where people are saying, well, I don't want to pay people to do nothing. And you certainly can make them, you can have them work. If you're in a non-essential business, if you're in a business that's been dictated to close, such as a gym or a hair salon or barbershop or, those things, restaurants, what can you do? You can be creative. You can say, hey, I want you all posting on social media. I want you doing professional development. You can find things for folks to do, and they're obligated. You're their employer. I mean, if you have work for them to do, then they need to do it. But as you said, even if you don't have work for them to do, you're going to have to put them back on the payroll. That was really part of the plan, of how this is supposed to work.
And I don't think it matters necessarily either that, from what I've seen, hopefully Georgia and maybe South Carolina will soon reopen. Who's to say you can't give them, a bonus, right? When this is over, if they've done but they come back something that will, the main thing is that you can't let their salaries drop below 25% of what it was before. So right. That's why you can't just, say, no, I'm not going to pay you. So you want, in order to qualify for this forgiveness, you've got to make sure that you at least maintain 25% of their salary. And then, there may be a time when you get close to the end, you may be able to look and say, okay, maybe I need to issue a bonus or whatever it might be. And however you determine that, I don't guess there's any ramifications or guidelines on how you have to do that. I think the main thing is that it's not the employers that aren't getting the big kickback, and taking the money out of the business. So,
yeah, I certainly haven't seen anything about, and I've thought about that too. Like, can you raise people's pay? Can you give them hazardous duty pay because they're
right.
Working on a frontline counter or something? And there's nothing that I've seen in the guidance that talks about prohibitions on increasing pay.
Right.
Obviously, you can't increase it. If you increase it over $100,000 annualized, then you're not going to get any credit for that.
Sure.
So do you want to run through your spreadsheet about how, because everybody's been focused on how to get the loan. All the bankers, everybody, it's all been about how do we calculate that number that you ran through earlier.
Right.
Now it's going to be about how do we keep it from becoming a permanent loan? How do we get the forgiveness?
Yeah, well, I have a spreadsheet here that, can you see that now?
Yes.
Okay, good. We literally just got this from our research service that we use, which is Thomson Reuters. They sent this out this morning, and we're pretty excited to get it just because this is the first thing we've seen that actually works through this. So it's a spreadsheet that we have, it's a calculator that will help people approximate what their loan forgiveness will be. And so as it says, the amount of the loan forgiveness can be up to the full principal amount of the loan, and any accrued interest that the loan proceeds are used to cover eligible payroll and certain eligible non-payroll expenses. 75% of the loan amount is used for eligible payroll expenses, and no more than 25% of the amount forgiven is used for eligible non-payroll cost. Additional reductions may be required to the extent that employee headcount and employee compensation is not maintained. So that goes back to, you got to make sure that we're at least keeping the employees where they were before, and not just, not paying the employees. Borrowers can use this worksheet to approximate the loan forgiveness. And so when you get into it, it asks you what type of business. And this will be a good thing too when you're trying to determine, there's going to be documentation that you're going to have to give to the bank when this is over to get the loan forgiveness. One of the things I've said, I've seen is 941s, which show your payroll. I'm assuming invoices for rent and for the other items that are asked for. But as long as you can show that you've paid these items, I haven't seen anything, specific that says exactly how you've got to provide this information. I'm sure the banks will be working on that, and they'll be asking for what they need. But let's just start with, it says proceeds used to pay payroll costs. So you'll plug in, how much have you paid in gross salaries? Again, when we initially were calculating, and applying for the loan, we were using what we call box 5 wages, which is the Medicare wages for our employees. And then you add to it any payments for vacation or parental, medical, or sick leave, with an asterisk being for something else we'll talk about in a minute, how this coordinates with the other types of things that we've been paying, getting credit for. Severance payments, group health care benefits, including the insurance premiums, retirement payment benefits, and state unemployment tax are the things that you include in your gross payroll. And then it does have a section for self-employed individuals. They could show their 1099s, their net earnings from self-employment, and their similar compensation up to $100,000. So that's how you come up with your total payroll cost. And then you exclude from it any employee that received over $100,000. You don't include that. We can only cap it at $100,000 per employee. And then also, if there was anybody whose principal residence was outside of the United States, you don't include that. And you also don't include, this is where we're talking about, qualified sick or family leave for which a credit is allowed under the Families First Act. And Ed and I did a webinar on this last week. And so if you want to go back and look on our websites, we have those included there, but how you qualified for that. So they're not going to allow double dipping, basically. You're not going to get the best of both worlds. Sorry to
interrupt you there, but I think that raises, a very interesting question that we don't have an answer to yet. If people are on sick leave or gotten the emergency family medical leave, and they've gotten this, some of them, sometimes you get reduced payroll. You only get 2/3 of what you would normally earn.
That's right.
Which, which is a greater reduction than is allowed on the 25%, right? So that's one contradiction. But the other is, and we'll talk about, these FTEs and how you have to maintain employment. What if you have these folks that are on leave and you're not going to get credit? You can't use your PPP money to pay them, but you still have an obligation to spend 75% of your PPP money on payroll.
Right.
Yeah. So
you have to make a decision, it sounds like. Do you take these people off of those particular, programs? Do you take them off the qualified sick leave and the family leave and just restore them to full pay?
And that's one thing I've thought is that maybe you just tell them, look, I'm just, for this 8 weeks, I'm just going to pay you, even though you would have qualified. And that's certainly not doing any harm to the employee, because if you're using the family, emergency family medical leave, then you're getting 2/3 pay.
Right.
With this, you would be getting your full pay. So these things are going to be tricky especially for small businesses to try to navigate.
Absolutely. It's going to need some navigation. And two, when you stop this, if you stop the family leave, does that then, you had 12 weeks. If you're only into the second week of that, do you now have 10 weeks left for after your 8-week period of your paying back the PPP for the loan forgiveness? Can you not resume that?
You do, because those two programs run all the way to December.
That's right. So, I can't see a downfall from stopping and paying the people full-time, full wages during this pay period so that you get the forgiveness. And then you can resume if they should continue to need to be out and use the, the family leave money credit for later. So.
Well, and I think this is where, getting some advice, getting some professional advice is critical, because, hey, we're focusing on trying to 100% out the forgiveness. But hey, look, the reality is this is a loan for 1% for 2 years that you don't have to start paying on for 6 months. So, you can't misuse the money and say, oh, well, I don't care whether it's forgiven. Like I've had people say, well, can I just borrow it and just, invest it in the stock market because I think the market's going to go up? No,
right.
You can't, because when you made the application, you made representations that how you were going to use the money, right?
Yeah.
And if you fraudulently use the money, then there are repercussions, criminal and civil repercussions for that. But if you get in a situation like with the paid leave, maybe you make a strategic decision to say, okay, well, I'm just going to have some money that doesn't get forgiven. I'm doing everything right, and I'm going to end up with a 1% loan that I get to pay back over 2 years. That's not a bad. That might not be a bad
deal at all
either.
Yeah.
So, I think it's important that people kind of get with the professionals and play out the scenarios.
Absolutely.
What will it look like? I think this is a good time to talk about too, when you're talking about that calculation, that the employer is not going to get to use the PPP money to pay their part of the tax.
That's correct. Yeah, they won't be able to use. You can't use your FICA match on that particular payroll, the Social Security and Medicare match. Whatever reason, they've carved that out. So I've had some employees or clients that were concerned that they're not going to be able to meet the 100%. But payroll is 75% of it. When you applied for the loan, you didn't include rent and utilities and the other items, the interest, the mortgage interest, as part of your fund. So hopefully you have those items in place. You can use that other money to help meet that 100% of the loan. I mean, I'm not saying it will necessarily work out that way, but I mean, again, like Ed said, it's a 1% loan for 2 years. So it's a very low rate. Even if you're left with a small portion of the loan, the whole intent is to keep people on the payroll so that when we finally get to go back to work on a normal basis or semi-normal basis, those people, have been able to pay their bills. You haven't had to let them go. You've got your workforce in place, and hopefully you can kind of hit the ground running. That's the way I understand it. Or the way I look at it. The other items that, as I said, can be used for this loan is rent. And again, we've had this conversation. Does it have to be in writing? Does it have to be a lease agreement? If I own my own building and I pay lease, there's nothing that says you can't. If I own my own building and I've been paying myself a reasonable rent, I wouldn't start paying myself more rent now just to meet this, forgiveness. But as long as the agreement was in place on February the 15th of 2020, it seems currently that you can do that. Utilities, and it says here electric, gas, water, transportation. I'm not real sure why they threw that in there. I'm not sure that's a utility, but I'm sure we'll get more explanation on that. And then telephone and internet, cell phone, the things that we have that, you have to make those payments whether you're working or not. So, and as long as those service agreements were in place before February the 15th. Same with mortgages, interest on those mortgages, real or personal property. And again, this is where it talks about the grant advance that might have been refinanced into the PPP loan. So you can use that as part of your proceeds that were not payroll related items that can be, potentially forgiven. So we get into the next section, and Ed, I'll let you talk about that, but we basically have to look at FTEs, and it gives you the time period so that you compare the two to see if you're in compliance and you didn't cut back on your FTEs. And I'll let you elaborate on that.
Okay. And again, as we've talked about a couple of times, all of the guidance we've gotten so far from Treasury and the SBA has been primarily about how to get the loan, how to calculate the loan. It hasn't been about how we're going to do these calculations on the back end to make sure that we're going to get forgiven. There are two reasons, besides just not using the money on the right things, there are two things that can reduce your forgiveness. One is not having the same workforce, the same numbers of people in the workforce over the period of your loan. So you have to have the same number of FTEs, full-time equivalent employees, during the period of the loan that you had in one of two time frames. It is either February 15th of last year to June 30th of last year. You take that period and figure out your average monthly FTE, or it's January 1 of this year to February 29 of this year. And you get to pick, as the employer, you get to decide which one of those numbers you're going to use. In the law, it doesn't define how we're going to calculate FTEs. The guidance that I'm seeing says, basically, they think you're going to use the same formula that they used for the healthcare laws. Is, when we passed Obamacare, they said full time means 30 hours a week. So if they're 30 hours or more, then you don't have to do a part-time calculation on them. If it's less than 30, you take all your part-time hours for the month and divide it by 120, and that's how many FTEs you have on part-time. That's the best guess we have right now, but there's nothing from SBA saying that's how we're going to do it. There's also this weird provision in the law that says if you've decreased your number of people, if you put them back on payroll by June 30th, then they count for the whole period of your loan. Well, I'm not sure how that's going to play out, because some people's loans may go well beyond June 30th. And some people's loans, let's see, if you got it this week, April to May, May to June, yours may be, your 8 weeks may be up before June 30th. So yeah, that's another one of those. Well, we don't really know how they're going to account for that. So yeah, stay tuned. More to come.
Absolutely.
And then, as you mentioned, the other piece of that puzzle is you have to spend 75% of the money on payroll, of the whole value of the money, and you can't reduce any individual employee's compensation more than 25%. If you have that opportunity to restore that during this 8-week period, and you'll get the forgiveness.
So needless to say, you're going to need, like you said, there's going to be a lot of calculations going on and things that, as a business owner, you're definitely going to need to be checking on. I'm thankful that we're getting some guidance, but I still think there's a lot to come. I think we'll be trying to work through this as well. So we're certainly available to help anyone that's interested in our help. We're trying to help our clients. We're trying to finish up tax returns that were extended to July 15th as well and keep those moving. And I know Ed we've been calling Ed. Clients have been calling him, trying to figure this out. And it's just a moving target, it feels like at times. But as time goes on, we'll just obviously work through it together. And it'll be our best judgment in some cases, because sometimes I have clients with unusual circumstances that honestly it's not answered anywhere. And so we just have to use our best professional judgment and try to do the best we can with this. Is there anything else, Ed, you wanted to add to our conversation today on the PPP loan?
Just real quickly, this is not about the PPP loan. This is about unemployment. The $600 kicker that is added on has just started getting funded this week. The other thing that people have to remember is that there's a separate federal unemployment system that's been put in place for people that don't normally qualify for unemployment, independent contractors, gig workers, self-employed people, they will be able to do it. And it's going to go through the Georgia DOL, Georgia Department of Labor website. And so if you are an employer and you have had employees that you put in for unemployment and they were disqualified, maybe they didn't have enough wages, they will get it now once the federal system is kind of grafted onto the state system. And it mirrors the state system. So they will get whatever benefit they would have gotten if they qualified. That's not here yet. It's probably going to be here this week. If you are an employer and your employees have been denied, you need to keep putting them in the system. It's not up to the employee to do that. So that's my last takeaway on that.
Well, I will say there's a lot in this CARES Act besides what we talked about today. There are other things that impact other issues. We're getting questions about the advance payment credit, the stimulus credit payment for 2020. Some people have already received that. So there's a lot of different things in this particular act. And so hopefully going forward, we'll be able to provide some more information.
Yeah, and we didn't even talk about the tax credits.
Yeah, exactly. That's what I'm saying. Haven't gotten those. Yeah.
But we probably should say, if you got the PPP loan, you don't get that.
That's correct.
You can't get the tax credits if you get the PPP loan.
That's right. You can't get that. One thing too, I will say one question that we've had repeatedly about the advance stimulus credit. It is an advance credit on your 2020 return. They're basing it off of your 2019 return if you've already filed, and if you haven't, they're looking back at 18. Had an unusual scenario where a client asked this week about her husband passed away after they filed their 2018 return. They got a joint return in that particular year. They had not filed their 2019 yet. So in the government's eyes, they're still married. And so she got $2,400, double the credit. And she's wondering if she's going to have to pay that back. From everything I've seen so far, no. They're saying that you're not going to have to pay this back. So I don't know. I can't say for sure, but from what we're seeing, if they've made a mistake, if they didn't give you enough, if they've erred on the side of that you didn't get enough of what you were due, then they will make it up when you file your 2020 return. But as far as having to repay any of it, supposedly you're not going to have to. So we'll see when we get ready to file your 2020 return, and hopefully not, but it's not supposed to go against any refund that you might have received for 2020. So, okay. All right. Well, thank you so much, Ed, for your help. You've been invaluable to us, and we really appreciate you joining us.
Yeah.
Thanks to everybody else for tuning in. We'll have another talk soon, hopefully. Thanks.
All right. Until then.
All right. Bye-bye.